Would you take comfort if the Fed were to cut rates in March or certainly by May, or do you think that's an urgent need for the Fed?
I'd be shocked if the Fed cut rates in March, and that's just because of the numbers. I mean, we've seen a number of different numbers come over the last 2 months. You had Powell go on 60 Minutes talk about he doesn't really see March being a month where he can cut rates. So, no, I don't think rates are going to get cut. And what does that mean for, my client? My client's not buying housing. I mean, you just saw the housing numbers that came out. The rates are over 7% on the 30-year fixed. Folks are staying where they are. Clients of mine who've been in their house for 20, 25 years, 30 years, baby boomers who might want to move down to Florida or something like that, they're not doing it because they can't get good rates on their mortgage. And real estate really hasn't budged that much either. So for all those reasons, I'm thinking that many of the clients that I talk to don't want to do anything until the Fed has made up their mind on when they're going to lower rates, if they're going to do it. And we're all looking at the numbers because it's affecting businesses that want to invest in their business because of where rates are. It's affecting folks who want to buy homes. So we're all just watching and waiting to see what's going to happen.
And in my notes, correct me if I'm wrong here, your view is that there will be no rate cuts in 2024. You think that's true?
I think it's possible because the numbers aren't dictating that. I mean, we've heard folks throughout the day say 2, maybe 3, even had a few folks from the Atlanta Fed say he's thinking 2. There's a possibility if we continue to run hot, there are no rate cuts. And if you look at historically over mortgages, my parents had a 13% fixed rate mortgage on their home. So I wouldn't be surprised if Powell and the gang is in it for the long term and keep things right where they are until they can absolutely be sure that inflation is where it needs to be. And last time I checked, we're not at the 2% handle yet.
So when you counsel clients on where they should put their money right now or where you manage it for them, what are you telling them and where are you putting that cash?
Don't fight the Fed. The Fed is making sure that inflation is beat. And they're going to continue to have this hawkish approach until that happens. I haven't seen the numbers dictate that yet. No one I've seen on this broadcast has said that yet. So you're going to have to look at in a recession, because I think that's what the Fed might want to try to start by basically, like our last guest, Mark said, try to crush the economy. If that happens, you want to make sure that you are in large cap U.S. companies, because if a recession happens, you already started seeing the number one reason why the stock market has done well is because of consumers. You're already starting to see cracks in consumers. $1 trillion in credit card spending, the highest it's ever been in this country. So if you start to see cracks in the consumer, you will definitely, I think, see a recession eventually. And if that happens, you want to be in large cap names, companies that have huge, robust portfolios, have made it out of the pandemic leaner and meaner than ever, are implementing AI, and are global. Most of the S&P 500, 30% of their revenue overseas. So that's where I would be. That's where I'm telling my clients to be.